Bloomberg Audio Studios.
Podcasts, radio, news.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
One of the most read topics or stories on the Bloomberg terminal today has to do with Israel. The International Criminal Court issued an arrest warrant for Israeli Prime Minister Benjamin Netanyahu for alleged war crimes. Let's break that down with Dan Williams. He's a reporter for Bloomberg News. He is based in Jerusalem. Dan, give us the story here. What does this really mean? Because the headline kind of jumps out at you here.
It is a dramatic development. We've now seen some 13 and a half months of open warfare between Israel, Hamas, and Israel and Hezbollah in Lebanon and other Iranian-backed parties in the region. That has now evolved into open lawfare, with this very important court issuing arrest warrants against the Israeli Prime Minister Benjamin Netanyahu and the former Defense Minister Yoav Gallant. Those are arrest warrants that are actually binding on more than 120 countries that are signatories to the treaty that underpins that court's conduct. Israel is not a signatory, neither is the United States. Israel had sought, however, to contest this request for the arrest warrants. That failed, as we discovered today, with the court saying it had rejected the Israeli motions and upheld and actually decided to issue those arrest warrants as sought by the special prosecutor.
Has the United States made any statement on this matter? Because the support for Israel, generally quite strong in the United States.
Indeed, and throughout these proceedings, we're talking about several months of anticipation. I believe the special prosecutor formally filed his request for arrest warrants back in late May. The Biden administration said openly that it thought this was baseless. Israel has obviously been far more vociferous, calling this anti-Semitic, likening it to the infamous Dreyfus trial. I think both countries will be looking to what the next U.S. administration, the Trump administration, will do. And significant parties in that administration are already saying that when the time comes, they will double down on their support for Israel. The question is, what does that mean? Are they going to try to convince like-minded countries in Western Europe to withdraw from the court, or on an individual level to state that they will not abide, they will not honor these arrest warrants? As I said, it's a dramatic development. And I think the Israelis will be strategizing very, very intensely right now.
Why historically has Israel and the United States not been a party to this court?
I think it comes down to a fear for their autonomy. Also, the fact that certainly since the war on terror, the United States has been waging at times quite unilateral national security policies abroad, wars that did not always have international support. I think the argument is that this would effectively intrude on self-determination, self-defense, the sovereign rights of a country. And also they would argue that this court is designed to bring justice to countries where there is no working internal, organic justice system. Now, Israel says its justice system works perfectly fine. It's had the support of some Western countries for that, but it seems that the ICC has decided not to fight in favor of that point of view this time. So in effect, Israel, or at least these two leaders, will be treated like pariahs in many of the countries that are required to abide by it. It's a development that I think Netanyahu will find very, very unwelcome.
I can imagine. Hey, Dan, just to educate us, where is the International Criminal Court? Where is it based? And are there certain countries that have particular influence on this court?
It's at The Hague in the Netherlands. That's also where the International Court of Justice is. That's a court with a slightly different mandate and different jurisdiction. And again, it's an extension of various treaties and conventions that arose, especially after World War II. The bulk of the world's countries are signatories. It means they have standing to argue, to submit. It also requires them to enforce when decisions such as this come down.
All right, Dan, thank you so much for your reporting. We really appreciate that. Dan Williams, he's a reporter for Bloomberg News. He's based in Jerusalem. Again, on the geopolitical front, just another major development. The International Criminal Court issues an arrest warrant for Israeli Prime Minister Benjamin Netanyahu for alleged war crimes. So we appreciate getting that on-the-ground reporting from Israel.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
All right, offspring number 4 bought Nvidia. He's down on his trade. And he bought it from his brother who works in the financial services industry. So we were on a conference call yesterday, heated, talking about breaking down the quarter for Nvidia. I thought the numbers were good, but let's talk to an expert. Mandeep Singh, Senior Technology Analyst for Bloomberg Intelligence. Mandeep, what'd you think of it? The numbers came in, a little bit better than expected. Guidance pretty solid, but again, the whisper was probably a little bit higher. So
yeah, and look, when you are priced for perfection,
Yep.
that Nvidia is always, any slight miss in the networking side, which was the case here, or even a gross margin degradation, which they said will go up in the second half of next year, so it's really a transitory thing, will have an impact on the stock. And I think overall the demand side looks pretty solid. They said Jensen called out there will be no capex digestion until the data center spending hits $1 trillion. That's huge. I mean, just think about how much runway he thinks without a pause. Now, does the market believe it? Probably not, given what we heard at our conference yesterday is it's moving from training to inferencing. And on the inferencing side, there is probably more.
What does inferencing mean?
So once you have a trained model, you are deploying that model in copilots or chatbots.
Okay.
And it's basically a trained model that's being used for answering queries. And that's inferencing, answering queries or, providing some productivity benefit. And that's where, do you really need a high-end NVIDIA chip? The answer is divided. Some people say for the older versions of NVIDIA chips, you could use that for inferencing. The latest one will continue to get used for training. And that's a plausible answer. But as we have learned, there is growing competition on the inferencing side from the likes of AMD, as well as startups like Sambanova, Cerebras, and all these companies are trying to get some portion of that pie.
And folks, Mandeep was referencing a conference he hosted yesterday. He and Anurag Rana, our other technology analyst at Bloomberg Intelligence. It was a phenomenal conference. I mean, they had some just amazing speakers there. And the next time you get something in your email saying, hey, come to a BI-sponsored conference, get off your rear end and get to these conferences, because some seriously smart people get together and you learn a lot. I did hosting a couple panels yesterday. Mandeep, so when you listen to the management team at NVIDIA, where do they say, I mean, can they look a year, 2 years in advance? How do they think their business is going to develop?
Yeah, I mean, look, the fact that they're saying gross margins will go down to around 71% over the next 2 quarters, but rebound.
71?
71.
Gross
yes.
margin.
Yes.
Wow.
And it's again, terrific when you look at it from every angle. It's just the way expectations were priced for.
Yep.
It's mid 70%. So the fact that they are going down to 71%, but in Jensen's, case, he called out those margins going back to 75%. So it's really a ramp up of their new architecture, Blackwell, which is causing the transitory gross margin degradation. But once they get that in full production, he expects gross margins to go back to 75%. Now, I do think, again, there will be more competition, but he clearly doesn't believe that to be the case.
All right. I mean, here are just some crazy numbers, folks. Just total revenue. Let's go really simple here. Revenue. Roughly calendar year 22, $27 billion of revenue. Calendar year 24, $128 billion of revenue. Have you seen anything like this in technology?
I mean, the closest thing that comes to mind is the build out of the internet infrastructure back in 1999.
Wow.
I think Cisco had a similar ramp up on the networking side. But what's different is NVIDIA clearly has the balance sheet, as well as they are in more products than Cisco was. So Cisco was just providing the networking gear. NVIDIA has a software line. They have a networking business and then their core chip business. So clearly, NVIDIA is going with the platform approach.
This is a stupid income statement. They have 55% net income margins, and they have no capex to speak of. 2, 3, 4 billion. So the free cash flow is just freakish. So what did they do with the cash?
Well, right now they're doing some share buybacks, but acquisitions may be on the table if the incoming Trump administration loosens the regulations. So, yeah.
Okay, let's go down that road there. What's the feeling in Silicon Valley in technology about that opportunity? Because boy, your industry, and particularly some of the bigger companies that you cover, the Amazons of the world, the Googles of the world, they can't do anything these days. Is the expectation that might loosen up?
Well, the overall M&A environment and IPO environment may get better, but in terms of big tech, I doubt anything is changing on that front, especially for the likes of Alphabet and Meta. Probably an Apple or an Nvidia may be able to do more acquisitions, but I think the companies that are in the crosshairs of what the incoming administration feels on the consumer side, I doubt they'll allow them to make any further acquisitions.
All right, man. Thanks so much for coming in here. Mandeep Singh, Senior Technology Analyst, Bloomberg Intelligence. He threw, and Anurag Rana threw a great technology conference yesterday, packed full of some really smart investors. Again, folks, the next time you get an invite in your Bloomberg inbox, jump on it because BI is sponsoring some really good investor conferences.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Let's get back to these markets. Again, we've kind of got red and green on the screen. The Nasdaq's off about 1%, but the S&P and the Dow are up slightly. Let's get a sense of where we go here as we wrap up this earnings season. Ann Bartels, Chief Investment Strategist at Sanctuary Wealth here. Ann, thanks so much for joining us here. Love to just step back, maybe get a 30,000-foot view from you on these markets. What are you talking to your clients about here today? Because, boy, a lot has changed in the last couple of weeks with elections and geopolitics and earnings and a lot of moving parts out there.
Well, we just released our 2025 year ahead forecast. And the name of it, or the title of it, is All That's New, That's Old. Yes, we have AI, we have blockchain, augmented technology, and we believe that this is really altering not just the US economy, but the global economies. And we've likened this to similar periods from 1995 to 2000, but also from 25 to 29, where we also had new technologies, although they don't feel like new technologies, the automobile, the railroads. And markets did phenomenally well because economies grew. So we believe we're in this extraordinary, growth cycle being led by right now Nvidia, which we talked about. They're really altering the next generation of technology. So we have our forecast for the S&P for next year at 7,200 to 7,400.
Wow.
And yes, that means another 20%. But when we went back and analyzed the 90s, from 95 to 2000, we had markets up 20% or higher 5 years in a row. Now, in 97 and 98, we had bear market corrections within the year because we had a Thai baht crisis, we had a Russia default and a long-term capital, a little bit of a financial crisis. But those markets still rallied strongly by the end of the year, and we think we're in a very similar position.
Talk to us about earnings. What did you take away from this earnings cycle? We're just wrapping up with some retailers this week. What is your view of earnings out there? Again, to get to that, any kind of S&P handle with a 7 in front of it, you have to be pretty bullish, I would think, on earnings.
I am. I think there's a lot to do with earnings. Markets really need earnings to grow. And we see the economy growing next year, especially since we've already had a 75 basis point cut by the Fed. Now, they may slow the pace, but they're more in an easing cycle, which we think is going to be very bullish considering the economy is growing around 3% and we're at full employment. The consumer has money to spend. Household net worth is at a record high. When we look at disposable income, there's enough disposable income for the consumer to spend. And as you know, and your viewers know, the consumer really is the main driver of our economy. So we do think the cycle is being led by technology. This year, it's been really all about semis. We think that narrative is shifting a little bit more now to software. Not that we're negative on semis, but we think the pace of their ascent can slow down. And now we see a cycle of software growing as we go into 2025. Another positive for earnings is the steeper yield curve for banks. And we also like the capital markets. Those are important ingredients to keep an economy going. I always say the banks are the heartbeat of the economy, and the private markets, the private credit markets are flush with liquidity to provide to companies. So we're very optimistic, and we see also profit margins growing. So we think we're really in that Goldilocks environment.
Well, I think I may be calling the top in the tech market because my youngest offspring just bought some Nvidia, so that's got to be the top. So if I wanted to diversify, Mariana, and try to find some value out there, where do I go?
So we think the best, if you're looking for value, we do think the best value is in the financials, particularly in the banks and also the capital markets. You know, energy is good value. But we don't really see crude oil firming up. We think crude going into 2025 is going to be either a range or to slightly down, especially with the Trump administration. There's concern that will add to supply. And if you add to supply in a weaker demand environment, which we're in, particularly because of China, we think that, you know, energy is really not the place to be for 2025. At least for value. So the value is really, I think, best in financials. What's really shocking is, you know, healthcare and staples, which are really called your defensive part of your market, are really falling off a cliff in terms of relative performance. We really don't even see any value in there. So best place for value would be the financials.
Marianne, how about outside the U.S.? Do you guys allocate any money outside of the U.S. markets?
You know, in terms of asset allocation, when you look at asset allocation models over a very long-term period, diversifying internationally does work. But our thesis going into 2025, if we are correct that we're in this new technological advance, most of the technology is being developed here in the United States. And that means you have to own the companies here in the United States. So we see capital flows continuing to come to the United States. So although markets we think can go up outside of the United States, we think the leader of the pack will remain the United States. Now, it may be choppy back and forth, you know, up, down, but by the end of the year, we still think the US will do well. And then you have to consider the US dollar. And we see the US dollar as either being stable to strong. So when you invest overseas, if the dollar strengthens, you lose part of your return. So for, you know, 2025, we have an overweight to the U.S.
All right, Marianne, thank you so much. We appreciate that. Ann Bartels, she's a Chief Investment Strategist for Sanctuary Wealth, joining us from New York via some Zoom here.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
All right, Alix and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well, so check us out at Bloomberg. Go over to youtube.com and search Bloomberg Podcast. All right, Bitcoin, I'm calling it out for Tom Keene. I'm calling it out for Matt Miller. Up 1.8%, 96,200. I mean, we are right on that $100,000 level. Let's break down what's happening here. Let's see what could be behind some of this stuff. Michael Regan, he's our crypto team leader. Yes, we have a team of reporters covering crypto at Bloomberg, which means you need a team leader to manage these folks, and that's Michael Regan. He drew the short straw. He joins us here in our Bloomberg Interactive Broker Studio. At the election, I'm just going to swag it here. It was about 60,000. Here we are pushing up against 100,000. What accounts for that delta?
Yeah, you know, the expression I keep hearing over and over again, Paul, is paradigm shift. You know, we went from sort of the near death of the entire industry with FTX and all the dominoes that fell after it a few years ago. Biden followed up, the Biden administration followed up with a really fierce crackdown on the industry. Now, what Trump has signaled is a complete 180. You know, instead of this, highly regulated, very intense scrutiny on the industry, he's talking about, replacing Gary Gensler with a crypto lover, and just, really being friendly to the broader industry of digital assets. But for Bitcoin specifically, it's this promise that Trump made in July at a Bitcoin conference to create what he called a strategic Bitcoin stockpile. So, think of the strategic petroleum reserve, or, we've had strategic wheat reserves in the past. the thinking of him and Cynthia Loomis, his ally in the Senate, the senator from Wyoming, is that if you not only Trump, first of all, the government owns about 200 and change Bitcoin from various criminal asset forfeitures. That sort of thing. I didn't know that. Okay. So that's sort of what Trump has hinted would be the basis for this reserve. Senator Loomis wants to go even further and have the government buy 1 million, nothing short of 1 million Bitcoins. So we're talking about 100 billion.
How many Bitcoins are out there? Do we have?
That's about 5% of the total.
So it's meaningful.
Of the total amount. Yeah. So, a big question mark, a big event risk looming over this market if that bill does not sort of gain more support. So far, she's the only sponsor of it. There's quite a bit of skepticism that she'll be able to get that passed. But the market is thinking there's a good chance of that. And not only that, that other governments will have to follow suit. If the U.S. suddenly is treating Bitcoin like a major reserve asset, other governments will likely be inspired to do the same. So that's kind of the backdrop for this just parabolic rally to the upside that we've seen.
Because right now it sounds a little bit like they would like to think about Bitcoin the way we currently think about gold, where we have gold sitting at Fort Knox.
That's exactly right. And what the Loomis bill would do would be sell off some of that. The Fed doesn't own physical gold; they own certificates that represent gold held in Fort Knox by the Treasury. Her bill would require the Fed to start selling gold to buy Bitcoin. Wow. To sort of replace it as a reserve asset. Now, obviously, you think about telegraphing to the market 100 billion buy at today's prices. I mean, sky's the limit on the price. That's the thinking, at least.
Because what I know about Bitcoin, I learned from Mike McGlone, a fixed, if not declining supply, and presumably ever more use cases.
Yeah. Every 4 years, or so, the amount that's mined, that's the new supply, it gets cut in half. So that proposed government buy would actually overwhelm the amount that's mined.
All right. Another thing, the Trump's transition team is discussing the creation of a White House post dedicated to digital asset policy.
Yeah, that's a scoop we had yesterday. Yeah. It's still sort of a lot of questions about what exactly that would mean, but the idea is, give the crypto industry sort of a representative in the White House to manage what they want to do with regulations and that sort of thing. Again, just another sign of this sort of 180-degree paradigm shift in how the government will think about crypto and Bitcoin, especially under a Trump presidency, compared to the very tough crackdown that we saw under President Biden. So a real dramatic change. Exactly.
And so I'm asking myself, how do we get to 60,000 to 100,000? That sounds like the reason. And it feels like Elon Musk has his fingerprints on some of this.
Yeah. I mean, he's a crypto aficionado for sure. We named the Department of Government Efficiency is just named after a meme coin. But I would throw in Michael Saylor and MicroStrategy is another really important element here. He's tapping capital markets for $42 billion, telling the world what he's going to do with it. Just buy more Bitcoin, and his stock is even outperforming Bitcoin itself by a tremendous amount. So it's really an interesting time to watch all this unfold.
All right, folks. I mean, we have 2,400 reporters around the world of Bloomberg News. Many of them, some of our best, have been and continue to be dedicated to this whole crypto market and reporting on the crypto market. And at least I know how serious Bloomberg News is about crypto when they appoint Michael Regan to be a team leader, because he's been doing this stuff a long time. He knows good journalism, and you put Michael Regan on top of this team, that means we're serious about coverage of crypto. So we'll stay on top of this stuff. But again, looking at the Bitcoin, up $2,300 here today, just under $97,000 per token. So a lot of folks out there are making some big bets on crypto. My youngest, who bought some Nvidia just recently, talked to me about buying Bitcoin. I said, not with any of the money I've contributed to your account. If you want to go out and spend some of your money, go ahead. So that's how we think about it here.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Alix Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We are broadcasting to you live from our Inactive Broker Studio. Interactive. I don't know what word I said, but Interactive Broker Studio.
That works.
Right here in Midtown Manhattan. So Nvidia was being billed as like the market mover for the rest of the year, that it was more important than the Fed, it was more important than any jobs data or inflation, but now it's over, so now what? David Kudla, founder, CEO, and Chief Investment Strategist at Mainstay Capital Management, joins us now. So David, what now? Like now what are you focused on?
What now? After Nvidia, that many have said might be more important to the markets than the Fed. But we do have PCE coming up at the end of the month, PEC for October, and then we'll get CPI and another round of data here in early December. And I think, for the Fed, as far as the Fed is concerned, they're kind of between a rock and a hard place. They have, since September, when we were looking at more than 200 basis points in cuts by this time next year, we've had unemployment has improved, has gotten lower, growth is stronger, inflation has crept up a little bit. On the flip side of that, if we look at personal bankruptcies, we look at auto delinquencies on auto loans, credit card debt, those are all at multi-year or decade highs. So there's cracks in the economy, there's things to be concerned about. But in terms of some of the other factors that the Fed looks at, I think there's a lean towards not cutting in December, and the markets won't like that. So I think we're in for some volatility. We've had a great 2022 and 23, and I think we're in for some volatility in 23 and 24, and in for some volatility in 25.
David, it was 2 weeks ago yesterday that we all woke up to a new president. We now know that we have a Republican-controlled Senate and House. Did that change your outlook or the way you approach markets, or maybe how you allocate assets here?
Yeah, we always say, and we educate our clients, and the thing that we try to make sure is that clients, and investors in general, there's a tendency to go to cash in an election year because they want to wait and see what happens in an election. And inevitably, election years turn out to be very good on average. This one, the best election year since 1936. But what we do want to do is look through to what we have for Congress and the executive branch and what that means as tactical asset allocators. And the big wild card for next year is tariffs and what that could mean in terms of a trade war. We know what that brought in 2016 in President Trump's first term. So there is some concern that with tariffs, that's also going to be problematic for inflation. How much of it was campaign rhetoric versus how much of it will go into effect? They seem pretty serious about it. Howard Lutnick, who was named Commerce Secretary, he's almost a self-proclaimed tariff czar. So I think there's going to be a run at it. What that results in terms of trade wars, the industries that affects versus others, that'll be very important for market participants.
When you mentioned there was going to be more volatility, what assets do you think will have the most volatility? Whether you're looking at, say, politics, as you mentioned, you also talked about potentially skipping a cut in December. Where do we see the most action?
Well, we're seeing a lot of volatility in bonds. We already have this year. Interestingly enough, as the Fed cut the first time, they've now cut 75 basis points during that time frame. Both the 10-year and 30-year have gone up about 75 basis points, which is that counterintuitive reaction function. So we've seen really a lot of volatility in the bond market. But we think we'll see increased volatility in the stock market because even though the election is behind us now, that uncertainty is behind us. We have the uncertainty over tariffs and just how aggressive some of these moves will be. Even when we talk about eliminating or significantly reducing government agencies, what that would mean to unemployment. So there's just a lot of new factors to look at in terms of overall investment strategy that will be driving volatility into both bonds and stocks. We don't think about volatility a lot for bonds, but we've seen a great deal. If we look at the MOVE index, which is like the VIX for stocks, bonds have been quite volatile. They'll continue to be. And we think we'll see more volatility in the stock market.
So we started off, David, by just chatting about Nvidia. I thought the numbers were pretty solid, but of course the expectations were just massive here. What did you learn, if anything, last night from Nvidia's results that maybe change or affirm your thoughts on technology?
Well, first of all, Nvidia is, if you talk about a company that has a very wide moat around it because of generative AI and their place in that, it's Nvidia. They beat top line and bottom line. Should have been a good report, but the problem is investors have become accustomed to these blowout numbers, just blowout numbers for Nvidia that they've had in past quarters. So it's a little bit of a letdown on the size of the beat. The stock sold off after I was trading, pre-market was down, and it's come back a little bit. But the bottom line is Nvidia still has a long runway ahead of it. And their new generative AI chip is doing well, and I think that it still makes sense as part of a portfolio.
What about Bitcoin? Are you on the Bitcoin bull train here?
Yeah, the interesting thing about Bitcoin is those that have been bearish on Bitcoin, fake internet money, it'll eventually go to zero, Ponzi scheme, whatever. They've been humbled. Right? They've been humbled. Bitcoin is, as we've said, it's here to stay. It may be an asset class all in of itself, but just looking at what's happened here since the election, the talk of a strategic Bitcoin reserve. You had a segment earlier on the show about it. President Trump wants to call himself the Bitcoin president. So we're seeing the asset or the asset class of just Bitcoin by itself, not the other coins, is rising on that speculation. And we look at it like gold, really, if it's digital gold. Right. Gold doesn't have a price to earnings ratio. It doesn't have a dividend yield. Bitcoin doesn't either. There is more gold that can be mined. Bitcoin, there's a fixed amount.
Right. David, thank you so much for joining us. Always appreciate getting a few minutes of your time. David Kudla, he's the founder, chief executive officer, and chief investment officer. I guess that makes him the boss at Mainstay Capital Management. Appreciate that.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.